Hi, I'm Max Keiser. This is the Keiser Report, chock full of voodoo and cults, satanic cults, voodoo dolls. Speaking of dolls, Stacy Herbert, tell me more.
The cult of America is in the news in many of our headlines here, Max. IMF bombshell, Age of America ends. The International Monetary Fund has just dropped a bombshell and nobody noticed. That's the important line there from Dow Jones Market Watch. Nobody noticed. Because, of course, nobody in a cult ever knows that they're deranged. It's only outsiders that it was obvious to for years before.
That's right. Whether you're in Scientology or whether you're long the dollar. You're in an insidious cult, a snow globe of denial, and your world is crashing upon you.
Well, the IMF has set a hell-bop sort of date. They set an actual date for the end of this cult, and that is China will surpass that of America in real terms in 2016.
Well, it's already happening. I think 2016 will be the recognition by the U.S. government in the form of transferring ownership of Fannie Mae and Freddie Mac, the biggest landlord in America, to the People's Bank of China. I've made that prediction before on this show. I think we'll see it in 2016. But the transfer of power is already underway, and, this is unmistakable, but nobody in America wants to talk about it because it might upset the popular delusion and the madness of crowds driving attendance at the theme park-like assembly line of self-actualizing, can-do attitude that has given us such triumphs in popular culture as Idiocracy and Jackass.
Here's another headline along these lines of the members inside the cult have no idea just how deranged they're looking. America appears to be sleepwalking towards disaster. Does no one care? This is Liam Halligan in the Telegraph, and he's wondering why the Dow closed at 3-year highs just as the S&P downgraded the outlook for U.S. debt.
Well, most of the volume on the exchange, the S&P 500 to Dow Jones, as we've talked about on this show, is driven by robots, by high-frequency trading bots, courtesy of folks like Goldman Sachs. We've talked about it on this show. Goldman Sachs has servers parked next to the exchange. They put in millions of trades every single day. They steal $100 million on average per day. And this is keeping the prices artificially high, like Wile E. Coyote shortly before he plummets down into the canyon in his quest to capture the Road Runner. In this case, the Road Runner is being eaten by China, and America is plummeting to its death into the canyon of a never land.
And then here's another headline. See, headline after headline after headline of people recognizing that America and the American dollar and people who have faith in it still are members of a cult. Over the past few years, mainstream analysts have shown a tenacious blind faith in the U.S. economy and the dollar that goes far beyond religion to the point of mindless cultism. And this is from MaxKeiser.com, but it's a quote from Brandon Smith of Alt Market. And he's looking at the fact that America looks like a cult. But he said, when even they begin to question the future of American finance, as has been occurring more and more every day, it's time to worry.
Yes, it's beyond religious fervor. That's the point. It's become this echo chamber, cult-like, America can't fail, which is very endemic when you see suicide cults, whether it's, or another one, Jim Jones, remember him, the Kool-Aid. They made the idea of drinking Kool-Aid, popularized that notion. Everyone committed suicide in Guyana, or the Hale-Bopp Comet cult. Here you've got 300 million Americans who are worshiping this idea of American-style free market capitalism that doesn't exist. They support market manipulation on Wall Street, and they're all going to die as a result. Now, that's less than 5% of the world's population. It is 25% of the world's garbage, so the rest of the world will breathe a sigh of relief. But as far as those living inside, they don't really understand that they're being used as cult fodder.
The equivalent of drinking the cyanide-laced Kool-Aid would be purchasing a McMansion with a subprime mortgage. This is them committing suicide. It's the equivalent of drinking cyanide-laced Kool-Aid.
It's financial suicide, as we've talked about. Financialization of the economy has turned into this hybrid reality that combines political malfeasance with financial larceny. And that's the combination between Obama's White House and Wall Street merging together into something even more insidious than fascism. It's a kleptocratism. It's a kleptocratism. Is the current political financial school of thought in America today, and it's not working. It's unsustainable.
To go with this point, though, of that this Kool-Aid drinking, this subprime mortgage taking population. Here's the headline, CNBC video, let's bulldoze the foreclosed home because the fixtures, the Wi-Fi, or whatever, even the color is not going to be stylish by the time someone buys them. So let's take a look at this video from CNBC.
6.3% below where we were a year ago. So, well, we want to throw out this idea that, people have talked about over the past few years, but maybe it's finally time to realize we need to do it. Should we tear down abandoned homes, foreclosed homes, or even built homes by the home builders that, all the fixtures and the Wi-Fi or whatever, even the color, are just not going to be stylish by the time people actually want to buy them?
Yes, well, of course. This is what they tried actually in the 1930s. Yeah. Agricultural products, milk, and other agricultural products were destroyed.
Did it work then?
No, it didn't work. And they tried to get the price to go up by destroying the food, even though people were starving. Here in America, you've got millions of people homeless, so they're going to destroy houses to try to bump up the price, never thinking that maybe if you put the homeless people into the houses, you would create an economic stimulus that would foster tax revenue and perhaps give you the means to pay down your debt. No, that would require mathematical skills, giving you the ability to add 2 plus 2 and coming up with 4. But that is beyond the current mathematical ability of the Obama White House. The 2 plus 2 equals a gathering at Facebook's headquarters in California to get a bunch of stupid people on Facebook to vote for me because they're morons? Yeah.
So the rest of the world is aware of this cult behavior. They see these Americans having drunk the subprime Kool-Aid and hoping to fix that by bulldozing these homes. And here's the headline, Max. Gold and silver making new huge moves as China makes fresh noises about dumping the buck. So this is from Business Insider. Poor Joe Wiesenthal, really upset.
He's a classic part of a cult. Joe Wiesenthal is the squeaky fromm of the paper bug cult. Every time silver goes higher, he writes a headline, this has got to be a bubble. This has got to be a bubble. No, the dollar's in a bubble, Joe, and you're freaking psychotic.
Well, he's reporting on, there are reports of unnamed People's Bank of China officials talking about shifting the bank's massive reserves into hard assets outside the dollar. And also there was another report over the past week where an important banker in China was encouraging the Chinese central bank to get rid of 2/3 of their dollar reserves of $3 trillion. So get rid of $2 trillion of it and move into hard assets and other commodities.
Well, this is where Peter Schiff could be right again. You know, a couple of years ago, he came out with this idea of decoupling, that China was going to let the yuan, the RMB appreciate, thus giving Chinese increased purchasing power to ride out this huge financial cluster bomb that's affecting economies all over the world. And that's certainly in the cards. If the RMB appreciates, then Chinese have got that ability to ride out the inflation happening in food and energy. So Peter Schiff, I think he's going to be on the show coming up soon. We can talk to him about it in more detail. But the guy is a frickin' oracle, okay? I don't care what anybody says. He knows what's going on.
And then here's another headline from maxkeiser.com. And I pick your headlines because you always take the quote that is so important and relevant and you make it the headline.
Thank you. I programmed my voodoo doll of Stacy Herbert to say that.
Eric Sprott. What the so-called silver experts neglect to account for in their models and projections is that the fiat money experiment has failed, and in this context, we believe the market has assigned world reserve currency status to gold, not the US dollar.
Well, there's a sneaky thing going on in the global economy, Stacy Herbert. Gold and silver are becoming the de facto world reserve currency. If you've got gold vending machines in airports around the world, people watching this show in airports around the world are probably walking by a gold vending machine right now. Go get yourself some gold. The proliferation of gold exchange traded funds on exchanges all over the world. The internet. This is the first time since the internet came around and became globalized back in the late 90s, early 2000s, that you've had an attempt to create a hard money global currency standard. And it's facilitating this in a number of ways. It's spreading information. It's spreading the ease with which people can buy and store gold easily at spot price plus a couple of percentage points. And this is what people are doing. And as they do it, they crowd out the paper money, the fiat money, the Keynesianism that's been in place since World War II. That's been a huge failure. There's nothing. Paul Krugman is a huge flapping nonsensical dirtbag over there at the New York Times. He makes no frickin' sense.
Well, you know, as I said, this quote is from Eric Sprott. He's a big buyer of silver. And he's just saying that a lot of people like Joe Wiesenthal, who also had a headline talking about silver in a bubble, and they're just getting it all wrong. They're not looking at that we're in a new paradigm shift. And that brings me to this final headline coming back to the IMF. Banks face $3.6 trillion wall of maturing debt, IMF says. So the world's banks face a $3.6 trillion wall of maturing debt in the next 2 years, and they must compete with debt-laden governments to secure financing, the IMF warned last week.
Look, for 30 years, all these governments have been extending the maturity. And now, like the tide moving out during a tsunami, those on the beach think that, oh my goodness, look at all these pretty shells. I'm going to wade out into the areas there and pick up all these pretty shells, not knowing that the tsunami wave is about to crush them. This is the tsunami of maturity that's about to overwhelm the entire global economy and force, in my opinion, the introduction of a new global currency based on the special drawing rights introduced by the IMF. And the IMF is getting aggressive about downgrading the U.S. because the U.S. is no longer going to be running the global economy anymore. It's going to be a central bank somewhere in Europe with the IMF and the World Bank and a new global reserve bank. And people are going to be paying world tax, country tax, state tax, and local tax to pay for this new World Bank. And it's all coming very, very quickly. And of course, China will have a huge role in determining the value of these currencies going forward in the new currency grid, post-Bretton Woods 2, post-world reality.
Well, the IMF gives you some advice on which are the lowest lying lands if you're going to avoid the tsunami. Irish and German banks have the most debt to roll over this year. And in terms of national sovereign debt, Japan and the U.S. have the most amount.
Woo, doggy. Looks like plenty more coming your way on this show going forward as the global economy collapses. Well, Stacy Herbert, thanks again for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way. I'll be talking to Chris Martenson. Fascinating guy, so stay right there.
Welcome to the future, bringing you the latest in science and technology from around Russia.
We've got the future covered.
Hungry for the full story? We've got it firsthand. The biggest issues get a human voice, face to face with the newsmakers on RT.
Welcome back to the Keiser Report. Time now to go to Massachusetts. Talk with Chris Martenson, author of The Crash Course, The Unsustainable Future of Our Economy, Energy, and Environment. Chris, welcome to the Keiser Report.
Thank you. It's good to be back.
All right, Chris Martenson, you write The Breakdown Draws Near. Your timeline is imminent. Tell us about it.
There's so many pressures that are still building in the system that haven't been washed out of the system. We failed to take advantage of a perfectly good crisis and deleverage. We shifted a whole lot of debt from the private side to the public side. That happened all over the world. And now on top of this, we had the Japanese quake, a rather startling drop-off in GDP in the world's third largest economy with unknown after effects that are going to go on around the world. One of the things I'm predicting, it's not just the products, it's not just the iPhones we have to worry about here, it's the reversal of decades-long patterns of liquidity flows coming out of Japan, going back into Japan at this point in time, Couple that with the Federal Reserve making noises about dropping QE2 at the end of that and not going straight to QE3, and I think I see a very large liquidity problem coming up to a theater near you soon.
Now, I want to stay on this for a little bit here, Chris Martinson, because we're describing a situation where normally people would be penalized if their businesses or they borrowed money imprudently and it turned bust and the system washes those people out. Now, when that occurs, there's a segment of the population that benefits wildly, and these are the savers. In other words, if the economy is going through a period of saving, of capital aggregation, those people who are living on retirement income, those people who are living on pensions, those people who are saving money, those corporations who are prudently saving money, they benefit in that scenario. And what we've seen in the last 20 years is that savers, people who actually form the backbone of a system, the capitalist system, are being completely penalized and in fact subsidizing the malinvestment of the system. Can you talk a little bit about that?
I'm a huge believer in incentives. You know, you get what you incentivize, and right now we're incentivizing people to speculate. We're incentivizing those who take huge risks. We're incentivizing people who want to borrow more and more and more, even though I think this whole problem that we're in, the predicament we're facing, can be summarized in 3 words to begin with: too much debt. And you're exactly right. On the other side of this, when we're subsidizing all of the people maybe who shouldn't be, if we want to use a judgment term like that, I mean, these are people, you know, the speculators, the people who went too far are being rewarded essentially on the backs of savers.
But let me ask you a question concerning another big part of the economy that we've used to rely on, and these are the so-called bond vigilantes. This is the group of folks who, if the Fed is getting too profligate and injecting too much cash into the system, they would sell bonds and treasury bonds to the point where the Fed would have to become more prudent in their policies. They seem completely absent currently, and the slack seems to be being picked up by what I call the gold and silver vigilantes. So the question is, what happened to the bond vigilantes? And is it true that the gold and silver vigilantes have stepped into the breach and really are the new sheriff in town?
What happened to the bond vigilantes? I wish I knew. My speculation is that they're actually fully in swing. They're in action when it comes to Portugal, when it comes to Ireland, when it comes to Greece. We're seeing bond vigilantes in full swing there. But in the United States, I think probably the person who could be described as maybe the largest vigilante, the person who's best positioned, holding the largest amount of treasuries, would be Bill Gross of PIMCO. PIMCO threw its hands up and said, listen, we're walking away from treasuries. We don't like how they're priced at this point in time. And the market barely blinked at all. And that's because the Fed is the largest purchaser and now the largest holder of treasuries in the world. I mean, don't fight the Fed is the original motto. But if you can't fight the Fed on the Fed's home turf, what do? Well, you go to gold and silver. So absolutely, I agree that gold and silver are signaling something very important here. And what they're telling me is the same thing that I've been worried about for years, which is that money itself, the concept of money itself, is now at risk. And the Fed is playing a very dangerous game here. They're conducting an experiment on, I guess, down one path, everything works out, and that's nice. But down the other path, we face destruction of the world's reserve currency.
Let me pick your brain a little bit here for a second. Ben Bernanke, when he testifies before Congress, they ask him about inflation, and he says, you know what? I am more worried about deflation than inflation. We later learned from insiders who work at the Fed, who are now working in the private sector, that what Bernanke looks at when he's determining whether you've got inflation or deflation, he looks at these TIPS, the Treasury Inflation Protection Securities, because they are an indicator of future inflation trends. And he looks at those and he sees that they're not trading at much of a spread over the 10-year Treasury. And in his mind, he doesn't look at gas prices. He doesn't look at food prices. He doesn't look at any of the things that people are experiencing every single day in terms of inflation. He only looks at this one indicator. And as we've just described, with the absence of the bond vigilantes, isn't that indicator faulty? And isn't he looking at an index that's giving completely false signals? And isn't he therefore kind of a boy in the bubble who's just spewing pure garbage?
I think that's a very fair characterization. So the Fed is buying through their SOMA account tips on a daily basis, weekly basis. We see that the trades come across my desk all the time. And so how can you, on the one hand, buy these things? And you know, obviously when you're buying something, creating buying pressure, you're pushing the price up and the yield down. And then to look at that and say, hey, look, the yield is kind of low here, so I'm not worried about inflation. It's self-referential garbage, as you said, of the highest order. It's just nonsense. But he puts it out there and people nod their heads and go, oh, well, I mean, that's what he said. It looks like he's got his eye on the ball. But meantime, if you look at commodity inflation, this isn't like just started happening since January. You can put a commodity chart up of maybe the continuous commodity index, one of my faves, 2002. We've been on now pretty much a 10-year bull run in commodities, all thanks to low money, low interest, free money, punish the saver policies of the Fed. It's now gotten to the point where it's just silly for the Fed to say we're worried about deflation or disinflation, given all the things that we need, all the things that can be exported easily. The prices for all of those are going up very strongly. So they're risking the most important thing in the Fed's toolbox, which is their credibility.
Yeah, well, he's like the guy who's inhaling his own flatulence and saying, oh, that smells pretty good. Well, anyway, so you were recently interviewed by Axel Merck, or you interviewed Axel Merck, who is very well known in the currency space, runs a few funds. Now, the point of this, one of the big points of this interview was that why is anyone waiting to sell the dollar? So here we've got a situation where the Fed's out of control, they're delusional, they're spewing garbage. You've got total rampant market manipulation in the marketplaces. It's all tied to the dollar. So what are people waiting for now? The dollar's getting close to its all-time low, but it hasn't tripped into its all-time low. What's going to happen now in the near future?
Well, eventually, you know, when we get out 5-10 years, I think everybody knows what happens. If the United States doesn't get off of its fiscal profligacy and get its multi-trillion-dollar deficits under control, if the Fed doesn't stop just printing money and putting it out into the universe, as it were, sooner or later, we're going to have a giant currency accident in the U.S. dollar. You know, the U.S. dollar is special. It's reserve currency for the world, and there's trillions of them parked all over the place in the custody account at the Fed and various central bank vaults all over the place. Some of it even in mattresses in South America. I mean, it's everywhere. Once the dynamic comes where people really lose faith in the dollar, I think we're going to see a very rapid evolutionary square change immediately in the dollar's value. I think the answer to this right now is that there's a lot of big money out there. They're the ones who really control the movement of things. And they're all thinking, as long as the music's playing, I got to dance, right? So what do you do if you're holding several billions or maybe even $1 trillion US dollars? What do you do if you're China? It's a really tricky business. But somewhere between here and there, I'm convinced that the dollar has a date with a much, much lower value. And the concern is that it'll get there in some rather disorderly, disruptive way on some Tuesday in February sometime. You know, it's just going to be an event that will just, you know, that's how markets work. The pressures build, and finally they release, just like a fault line giving. And so there's definitely pressures on this right now. I see the dollar as having a date with disaster at some point, unless and until a lot of things change, and I don't see any evidence that those things are changing now.
I read recently that people in America who are upset about the rising price of gas, they drive their car around from station to station looking for cheaper gas until, in fact, they run out of gas, and they're stuck on the roadside somewhere with no gas. Now, apply this analogy and this thought process to this wall of maturing debts that you write about and this day of reckoning for the dollar. It seems that over the past 20 years, the problems have been kicked down the road by extending maturities, the defer and forget mentality. But what we're seeing is that all of these maturities are now clustered around this huge wall of maturing debt. So how much is due to mature? What's the time frame on this? And is this, in fact, the day of reckoning? Is it tied into what you think could be the dollar's rendezvous with destiny?
So all sovereign governments, they have two things they have to worry about. The new debt issuance that they have to put out there, so they float these things in say, the Treasury auction in the U.S.'s case, and the Fed steps in and ends up buying equivalent about 75% of that. That's just the new issuance. Then there's what you're talking about too, which is this wall of maturing debt, meaning we sold a one-year bond last year, now it's a year later. Guess what? We have to pay that off, and we want to roll that as we go forward. So right now in Japan, over 50% of their GDP is going to be maturing over this next year. That all has to be financed. For the United States, it's about 28% of GDP. These are enormous numbers. All of that has to be rolled over and has to be handled very smoothly by the markets. And if it's not, it'll be handled rather unsmoothly. And that's, what you're raising is a really serious issue, because we have not just the sovereign debt that's all maturing, which is about 27% across all the advanced economies, 27% of GDP. We also have a whole bunch of bank debt that's coming due. We've got option arms that are coming due. We've got all this debt that's just coming due. This is the context for understanding really what the Fed is doing. Do they intend to punish savers? No, but they're looking at this whole suite of things coming up, and they're saying, listen, if we have to sacrifice one or two of these things, I guess it's going to be the savers, because if we don't have the liquidity to fund all of this debt, it will not roll. We'll have a gigantic financial accident. I understand why they're doing that, but what they're not looking at is what comes after that. So you save the system for another day, you get to wear your underdog cape for a while. That's great, but what about next year and next year? The pressures just keep building, and this is the problem we're facing. The predicament we're facing is we don't have a clear plan for how we're going to get all of this debt funded and paid for and expanding like our system wants. As I explained in my book, the system we have, the money system, needs to keep expanding. This is the fight the Fed is undertaking, and I shouldn't just pick on them. I think the ECB is facing the same issues. China's looking at the same issues. Japan's looking at the same issues. We're all here, but I would say tomorrow has arrived. We're in the middle of it right now.
Right, it has to keep expanding, just like Madoff had to keep expanding and Enron had to keep expanding. This is an enormous Ponzi scheme, and as you point out, once the jig is up, it can pancake down into a huge catastrophe very, very quickly, and the fact that our leadership in America is doing nothing to prepare people for that is really quite tragic. All right, Chris Martinson, we only got through half my questions, so we'll have to have you on again soon. Thanks for being on the Keiser Report.
Thank you. The pleasure's been mine.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Chris Martinson. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.